Elon Musk is the wealthiest person in the world, with an estimated net worth of over $380 billion as of 2025. But here's what most people don't know. He's actually failed more times than he's succeeded, lost everything multiple times, and came within days of bankruptcy before building his empire. Today's Elon Musk didn't start with billions. He started with student loans, a borrowed computer, and an obsession with solving problems that others thought were impossible. His path to becoming the world's richest person reveals 3 key strategies that any entrepreneur can learn from. By the end of this video, you'll understand exactly how Musk built multiple billion-dollar companies simultaneously, the specific mindset that separates him from other entrepreneurs, and the wealth-building principles you can apply to your own ventures. Hit that subscribe button because I'm breaking down the strategies of history's most successful entrepreneurs every week. The early foundations, Zip2 and PayPal. Musk's empire didn't start with rockets or electric cars, but it began with a simple web directory called Zip2. In 1995, fresh out of college with $100,000 in student debt, Musk and his brother started Zip2 with $28,000 borrowed from their father. The company was essentially an online yellow pages for newspapers, helping them publish business directories online. Musk lived in the office, showered at the YMCA, and coded 20 hours a day. The business model was simple. Charge newspapers for web services they desperately needed, but didn't understand. In 1999, Compaq bought Zip2 for $307 million. Musk's share was $22 million, his first major payday. But instead of retiring or buying luxury cars, he immediately invested almost everything into his next venture. That venture was X.com, an online banking and payment company that would eventually become PayPal. Musk invested $12 million of his Zip2 money into X.com, betting that online payments would revolutionize commerce. The PayPal story reveals Musk's first key strategy. He doesn't just spot trends, he creates them. While others saw online payments as risky, Musk envisioned a world where digital transactions would be faster and cheaper than traditional banking. When eBay bought PayPal for $1.5 billion in 2002, Musk received $165 million. At age 31, he could have retired wealthy. Instead, he saw this as seed capital for even bigger bets. The impossible bets, Tesla and SpaceX. Here's where Musk's story gets really interesting. Most entrepreneurs would diversify their wealth or invest conservatively. Musk did the opposite. He'll bet everything on 2 industries that everyone said were impossible to disrupt: automotive and aerospace. In 2004, Musk invested $6.5 million to become chairman of Tesla, a startup trying to build electric sports cars. The automotive industry laughed at Tesla. General Motors had killed their electric car program, and everyone knew that electric vehicles weren't commercially viable. Simultaneously, Musk founded SpaceX with $100 million of his own money, aiming to reduce space transportation costs and eventually colonize Mars. The space industry was dominated by government contractors charging billions for rocket launches. Private space companies had never succeeded. This reveals Musk's second key strategy. He deliberately chooses problems that others consider unsolvable. While most entrepreneurs avoid heavily regulated industries with established players, Musk sees opportunity where others see impossibility. The early years were brutal. Tesla struggled with production issues, quality problems, and constant cash shortages. SpaceX's first 3 rocket launches failed spectacularly, nearly bankrupting the company. By 2008, Both companies were on the verge of collapse. Musk had to choose between saving Tesla or SpaceX. He couldn't fund both. He split his remaining money between them, literally betting his last dollars that at least one would succeed. The near-bankruptcy breakthrough. The 2008 financial crisis almost ended Musk's empire before it really began. Tesla couldn't raise money, SpaceX was burning cash, and Musk was personally broke. He had to borrow money from friends to pay rent. But September 2008 changed everything. SpaceX's fourth launch succeeded, reaching orbit and winning a $1.6 billion NASA contract. Just months later, Tesla received a crucial investment from Daimler that kept the company alive. This period reveals Musk's third key strategy: extreme persistence combined with strategic risk management. While he bets big, he also maintains multiple paths to success. When one company struggled, the other could provide stability. The compound effect, building multiple empires. Once Tesla and SpaceX gained momentum, Musk leveraged their success into additional ventures. His approach isn't random diversification. Each company reinforces the others. Tesla's battery technology advances SpaceX's mission to Mars. SpaceX's manufacturing innovations help Tesla's production. The Boring Company could transport Tesla vehicles underground. Neuralink could interface with autonomous vehicles. This interconnected approach creates what investors call synergistic value. Each company's success increases the value of all the others, multiplying Musk's wealth exponentially. Tesla went public in 2010, and as electric vehicles gained mainstream acceptance, the stock price soared. SpaceX revolutionized space launches, dramatically reducing costs and winning contracts from NASA and commercial customers. The wealth multiplication effect. Musk's current net worth of over $380 billion primarily comes from his ownership stakes in Tesla and SpaceX. But here's the key insight. His wealth isn't from salary or traditional business profits. It's from equity appreciation in companies he built. When Tesla's stock price increases, Musk's wealth increases proportionally because he owns about 13% of the company. When SpaceX's private valuation rises, his stake becomes more valuable. This is wealth building through ownership, not income. The lesson for entrepreneurs is profound. Instead of working for money, build assets that appreciate in value. Musk's billions come from owning pieces of companies that solve important problems at massive scale. The expansion strategy. Musk's recent ventures follow the same pattern. He acquired Twitter, now X, for $44 billion, not as an investment, but as a platform to influence global communication. He started XAI to compete in artificial intelligence, seeing AI as crucial to humanity's future. Each new venture serves multiple purposes: solving important problems, creating new revenue streams, and positioning Musk at the center of emerging technologies. The mindset behind the empire. 3 mental frameworks separate Musk from other entrepreneurs. First, he thinks in first principles rather than by analogy. Instead of asking, how do others do this? He asks, what are the fundamental physics of this problem? This leads to breakthrough innovations others miss. Second, he optimizes for impact over comfort. While most wealthy people seek security, Musk continuously risks everything on bigger bets because he's motivated by advancing human civilization, not personal wealth. Third, he maintains extreme long-term thinking. His Mars colonization timeline spans decades. His neural interface vision could take centuries. This perspective allows him to make investments others consider too risky or futuristic. Lessons for entrepreneurs. Musk's empire offers several actionable lessons. Start with problems you're passionate about solving, not just profitable opportunities. Musk's wealth comes from his obsession with sustainable energy, space exploration, and advancing human capability. Reinvest success into bigger bets rather than diversifying into safe investments. Each of Musk's windfalls funded his next impossible venture. Build interconnected businesses that reinforce each other rather than unrelated ventures. This creates compound value and competitive advantages. Focus on ownership rather than income. Musk's wealth comes from owning appreciating assets, not high salaries. Most importantly, be willing to risk everything repeatedly. Musk has been days from bankruptcy multiple times, but continued betting on his vision of the future. Elon Musk's billion-dollar empire wasn't built through luck, inheritance, or get-rich-quick schemes. It was built through systematic risk-taking, reinvesting success into bigger problems, and maintaining long-term vision while others focused on short-term profits. His story proves that extraordinary wealth comes from solving extraordinary problems at scale. While most entrepreneurs play it safe, Musk deliberately chooses the hardest challenges because that's where the biggest opportunities exist. The principles behind Musk's success: first principles thinking, strategic risk-taking, and building interconnected assets can be applied at any scale. You don't need billions to start, but you do need the mindset that views problems as opportunities and failure as education. What's the biggest lesson you take from Musk's journey? Let me know in the comments, and if this breakdown of his wealth-building strategy was helpful, hit that like button and subscribe for more entrepreneur deep dives. Remember, every empire starts with someone willing to bet on a better future. The question is, what impossible problem will you choose to solve?